Good day everyone, my name is Michael Florentiades. I'm the Chief Economist at xm.com and this is your European Open briefing for Wednesday, December 6th. Now, the yen has gained across the board on negative risk sentiment, but it's a little bit strange that gold is also selling off with respect to safe haven flows. The Australian dollar is hurt by a miss in third quarter GDP numbers. And for the day ahead, we have mainly North American stuff to watch, like the US ADP employment numbers, labor productivity, although it's for the third quarter, a little bit old, and Bank of Canada rate decision, as well as energy inventories. So, as we said, the yen has been quiet lately, but definitely not today. Risk of sentiment has pushed the Japanese currency substantially higher, especially in Asia, where stocks are broadly negative, particularly in Hong Kong and Japan, where the stock market indices were recording losses of nearly 2%. This is a 2-month low for MSCI Asia Pacific ex Japan index, so that's something to watch. Although, if we just check how serious this sell-off is, well, the 4-month low in gold suggests it's not too serious. Gold has hit the 1260 level, but it rebounded from there. So I would say that the action in gold suggests that the dollar is remaining relatively firm despite the drop-off in long-term yields. The 10-year Treasury yield back to around 2.33% from around 2.4%. So dollar is holding on. On to the main economic news of the day. The Australian GDP numbers for the third quarter. Well, Australian GDP slightly missed expectations. It came in at 0.6% quarter-on-quarter, 0.7% was expected, and at 2.8% year-on-year, whereas 3% was expected. You see the second quarter growth, which was surprisingly small. Then we have this acceleration. So overall, I would say growth in Australia is performing well, but we have some issues to watch. Specifically, investment is rebounding. So you can recall that Australia suffered a lot from the decline in investment after the sell-off in resource prices, commodity prices. But recently, investment is rebounding in Australia, whereas consumers, which helped to support the growth in the Australian economy in recent years, are lagging a little bit. Why is that? Because we do have over-leveraged consumers, so excessive debt burden, and we are also having a low wage growth. So these factors are conspiring in effect to keep Australian rates where they are at low levels and against any rate hikes anytime soon. Now, the Aussie did drop below the 76 US cents level on the GDP data. As you can see, the downward spike when the data was announced. So 0.7570 was the session low. Essentially, the Aussie has went back to Friday's levels. The Aussie did receive a boost from the retail sales from the previous day, so that's gone now, and we are back to the levels of Friday. I think also contributing to this weakness have been weakness in some metal prices, a bit of a risk of sentiment, maybe some worries about China, maybe also the dollar, as we said, has been holding on. We saw it especially against the euro and the pound being especially strong, so the dollar is not really selling off. So I think this might have contributed to some retracement in the Aussie giving back those gains. Now, On to what's ahead for the remainder of the day. We said that here's Australian GDP. That's done, and we had German industrial orders. They came in much better than expected, but the euro was not much moved. I think this is a relatively volatile number, so the swings in 1 month swing is not going to affect the euro that much, or so it seems. So in the afternoon we have the ADP private national employment payrolls at 185,000. This would set up the stage for the non-farm payrolls on Friday. We are expecting a number around 200,000. We also have third quarter labor cost and productivity. And of course the highlight for today is the Bank of Canada rate decision. No move is expected. We have seen strong employment numbers last Friday out of Canada, but overall the economy there also facing some issues, and probably the Bank of Canada is going to wait for a few months before it raises rates again. And last but not least, certainly for oil traders, the crude oil inventories in the US expected to post quite a substantial draw of 3.4 million. That's all from me. Thank you very much for watching and have a great day.